Hey everybody, Bitcoin hitting its lowest level since late February today, dropping below $54,000 at its lows of the session. The digital currency tanking after Mt. Gox, the Japanese Bitcoin exchange that went bankrupt a decade ago, said it's beginning to pay back creditors in Bitcoin. That could result in nearly $9 billion worth of coins being dumped onto the market. The rival Ether dropped about 5% itself. It has now lost more than a quarter of its value since hitting an all-time high in February. At one point today, $170 billion had been wiped out of the crypto market. But where are the coins going from here? Let's check in with the chart master, Carter. You've got a Chartapalooza coming to our way.
Yeah, and we can move through them fairly quickly. There are three long-term charts and three short-term charts. But the question is, before we look at that, weakness to take advantage of or weakness to stay away from? It gets down to that. It's one or the other. Let's figure it out together. This goes back to 2015, Bitcoin at 200. Now let's annotate it. First chart, second chart. You can see the lines are well defined. You can call that an ascending triangle. You can call it whatever you want. But we know that we attempted to break out, third chart, and we didn't. Now the question is, do we drift back to the uptrend line? And that's perfectly tolerable, normal, or is something worse afoot? Let's go to the short-term charts and try to figure it out. So here is just over the past 2 years. Let's do the same thing. Let's annotate it and put some lines in. Those are mathematically parallel lines, Tyler, and we are down to the lower band of this well-defined channel from which we've moved 18,000 to almost 70. And so my hunch here is that you buy this dip. It should be noted that since January of 2023 to present, we've had 6 20% plus sell-offs. This one is 27%. My hunch is it's weakness to take advantage of rather than weakness to stay away from.